Good morning, everyone, and welcome to this NPL Day session focused on Spain, organized by DD Talks. My name is Ángel Pérez. I'm a partner at Uría Menéndez, the Spanish law firm in its Madrid office. I am coordinating its banking and finance department. And I have the pleasure and the honor to moderate this luxury panel, because we can spend the following minutes with a group of people with a long experience. They are young, or at least young at heart, but very experienced, all of them. And I have the pleasure to introduce all of you. First of all, Natalia Joubrina, Head of NPL Scenarios at AnaCap Financial Partners. She's responsible for NPL and REO investments in Western Europe at AnaCap, with a strong pan-European network and on-the-ground local presence in Spain, because they also have here a proprietary asset management platform. We also have Paula, León, Head of Institutional Sales at SAREB. She began working in the banks, but she has been since 2003 in SAREB. She has been responsible for managing the NPL portfolio assigned to Valle Real Estate, and since July 2017, joined the institutional sales team. We also have Rafael Gonzalo, Managing Director at LCM Partners. Rafa belongs to LC Financial, which is a leading purchaser of our performing and non-performing portfolios across Europe, with more than 46 billion of assets under management from consumers and SMEs, and around 1,000 employees across 11 different sites. And Rafa has been in its group for more than 15 years in different roles. We also have with us Alberto Valle, Director at Accuracy. He's the head of the financial services industry in Spain, in Accuracy, which is an international advisory firm with presence in 14 countries, specialized in transactions, financial modeling, and quantitative assessment. We also have with us José María Gil-Robles, partner in the M&A team at DLA Piper in Madrid. He's the head of the corporate department, and I have to say the pleasure of having been discussing legal issues with him for more than 11 years. And we also have Manuel Enrique, Chief Investor Relations Officer at Ahora Asset Management. He worked before in Bank Inter, Link Securities. He was Director of Strategy and Investor Relationships at Parquesol Inmobiliaria. He was Director of Investor Relationships in SAREB before joining Ahora Asset Management. So with all these luxury panelists, as I said before, we will share some time discussing some hot topics on the NPL Spanish market. The first topic that we would like to discuss would be how the Spanish banks can come across the impact of the COVID pandemic, because many of them, as you know, have been digesting the effects of the 2008 crisis. We have been witness of lots of NPL transactions during the last decade. And when it seemed that Spanish banks have already come across the prior crisis, now they will have to face a situation when experts say that their stock could double, and they would maybe reach a stock of bad loans of around 160 billion euros. Do you think that are the sellers and their balance sheets prepared to sell right now? And which factors do you think that may influence the magnitude and the timing of the recovery that we are seeing of the NPL sales market? This first question goes for Manuel.
Thank you, Ángel, and thank you, DD Talks, for letting me be in this panel of good professionals and most of them friends. Regarding the question, Ángel, banks, which are the primary sellers on the primary market, certainly they have strong balance sheets as to afford the sales of non-performing loans. However, with this pandemic situation, what has happened is that even though we expect that in the coming months we'll have a new wave of NPLs and they may double, due to one, the very much relaxed regulation on the part of the Bank of Spain and the European Central Bank, due to the fact that we have 100 billion of government bonds being provided to issuers, the fact that we have 55 billion euros in payment moratoriums, that some of them have already concluded, but some of them have been renewed. In this environment, what we can see is that banks, they are not pressed to sell. And on the other hand, what you have is buyers that they feel that we are in a very distressed situation, and when they put bidding prices to buy, they are distressed prices. The summary of it is that no deals are being done. And in my opinion, this will continue to be so until the day that we have things back to normal, that the regulation is tightened, that we have the moratoriums being expired, that we have then the government granted bonds expired too and have to be cleaned. And on the other part, we also have a situation in which the government is supporting temporary layoffs of workers that will eventually expire too. At that time, what you will have, in my opinion, is a new wave of non-performing loans in the first round, very much related to SMEs, be it secure and unsecured. And then, as some percentage of these government temporary layoffs do convert, unfortunately, into unemployment, a second round of non-performing loans related to consumer loans and probably mortgage. My expectation is that the industry will anticipate that new wave, and the primary market will activate before the end of 2021. That's the best that I can assess.
And for instance, another seller like Paula, how do you see things from SAREB?
Well, I actually agree with everything that Manolo was saying. I think this NPL wave will be different, both in the nature of the debt that will be included, but also because now we do have an active NPL market that we didn't have when the first wave came, I think. The market is there, the buyers are there. I think everyone is much more used to how things are done and how things can be solved. So obviously there will be changes, but I think we are, if this comes to the moment where we will see a lot of new primary sales again, I think we are in a better position than we were in the first wave in that sense. I think all the players in the market are much more used to these dynamics, and I think that's a good thing, because that will help to solve the problem, I hope, in a quicker way than the first one happened.
And from the advisor's perspective, for instance, Alberto?
Hi, Ángel. Thank you, NDD Talks. Yeah, I mostly agree with everything that has been said. I would like to add a couple of comments. First is that the banks right now are trying to identify those loans that are unlikely to pay, even though that we are living a special situation with all the aids and the moratoriums. And this is because the ECB has asked them to be prepared. But nowadays, what they are focused is in this task and not in selling portfolios. So in the coming months, we can maybe see the tail for the pre-COVID stock, but not for this new wave that is coming. And some of the things that can speed up a little bit the things at the end of the year is the new regulation that is in place right now with the IFRS 9 and the new definition of default. And the bank's results can lean the balance in one way or the other. If the provisions that bank has made in this last annual accounts are enough to support, and they has been very generous, in fact, to support the default rate that is coming and the cost of risk is under control, we won't expect a huge increase of NPL portfolios this year, but perhaps maybe the beginning of 2022.
Thank you. And let's try let's take a step back to try to gain a little bit of perspective. And now let's take an European approach. So Natalia and Rafa, how does the situation of the Spanish market compare to other European markets? because you know that maybe it's a commonplace saying that the Spanish market is already a mature one with very specialized players compared with other industries in other jurisdictions in Europe. How do you see that?
Sure. If we think about matured markets and what actually would classify one market being matured, I would say there are four main characteristics we should be thinking about. Number one is the depth of the market itself. And we all know that the Spanish market was one of the most active, pre-COVID. It has had over 160 billion transacted in 5 years on the runway to COVID. Then second aspect is a sophistication of servicing landscape. Again, there has been a significant M&A activity in Spain, more so than in other European countries, which actually resulted in this creation of actually robust infrastructure for servicing. We have a number of captive and some still independent players in the market. And what is important, this servicing landscape is actually of scale. Again, it's another sign of the mature market. The third aspect is availability of comprehensive and historical data. And there has been a massive, I would say, improvement over the years in Spain, especially if we look at Southern Europe, what's actually available for us as investors to use in our underwriting in Spain. So yes, yet another sign of a Spanish market being mature. And the last but not least characteristics is that presence of secondary and active secondary markets and financing. Clearly, for investors, it's very important to have any certainty of what happens, at the end of the investment life and what exit options are available. And through the life of the transactions, how can we actually improve the financing options? Even post-COVID, there is an active secondary market, which is clearly not always the case in some of the kind of more emerging jurisdictions in Europe. So clearly helpful from maturity of the market perspective. And then on the financing side, not only are we seeing, active appetite for financing post-COVID, but clearly even pre-COVID, there has been further development of getting the first securitizations rated, public transactions. Again, important from having comfort of being able to underwrite those exits of investments in the future.
Yes, further to Natalia's words, I would say that in spite of the market, having contracted by almost a third, we're talking about 208 billion in 2018, down to 68 billion. Spain remains quite attractive for the reasons that Natalia has mentioned, in comparison to, if you will, higher volatility in Italy, although there is also a flurry of activity coming from there. But the other dimension that we can take into account is the level of concentration. What we've been seeing is that the servicers have been concentrating, both, if we look into the value, Altamira transaction, what Magnum did, concentrating some of the unsecured and then selling to Plataforma Legal, that is happening. We've also seen, although you could argue this is more European, some concentration in the advisors, certainly concentration on the vendor side with banks merging, and that is going to be, I believe, a theme and a driver for the market moving forward. And last but not least, some concentration in the purchaser side. Even though we haven't seen M&A, and that was a topic for discussion, certainly in 2020, there were a few names that were under discussion. The change of the funding model at some of the investors have effectively mean that you have fewer seats at the table. When you look who are you competing against in many of these deals, there's a less number of players, more specialized, which is another degree of sophistication. That unfortunately has not diminished the level of the intensity of competition.
Thank you very much, Rafa. I don't know if you have a glass ball there to watch the future, but I will ask you, and also will ask Alberto, your views on which type of products will be the stars, no, of this 2021 year. Because in 2020, I think we have seen very few REO deals. We saw that the year began with launching very large individual secure portfolios, but the activity diminished a lot in the medium months of the year. No, what do you think that will be the spotlights in the next year? And I don't know if secure NPL sales, unsecured REO portfolios, SMEs portfolios. In case of SMEs portfolios, which sectors and asset classes do you think that will take the spotlight? So Rafa as purchaser and Alberto as advisor, how do you expect that will be the coming months? Sure. And I recall that this will be recorded, so then we have your words, and we can revisit that in the beginning of 2022.
I'm sure. I do have a crystal ball. Unfortunately, batteries are down, so I cannot be on. I have to say, let's not forget, one of the striking pieces of news. We saw Santander Bank posting 8.7 billion losses after having provisioned 12 billion for the year. So, and the rest of the banks following suit means that there are going to be volumes. Of course, there's the distortion in the market from the moratory loans and the different schemes that both at the European and the national level may happen. So it's hard to say. We have to learn from the activity that we've been seeing during the late 2020 and what we are seeing early 2021. I would say that activity in the unsecured market will continue. There is less volatility in the bid-ask spread. Of course, lower volumes, but there is a steady flow. In Spain, as well as in other markets, we are seeing performing and reperforming books being brought up for sale. This is in a specific asset class that is not for everyone's taste or cost of capital. We're certainly is one that we're very keen on. And we think that, I would say, similar to what we are seeing in the UTPs in Italy, might be the other theme moving forward. We've been entertaining discussions with both banks and government entities trying to envisage how they're going to approach the SME problem. I think it's pretty much up for grabs in terms of what direction is going to go. But we are strengthening our efforts in that space. We do believe that Spain, amongst other countries, will have an issue, a problem when dealing with the SMEs, and extending is part of the problem, but is certainly not the full answer to it. So to your original question, I think we're going to see a healthy level of activity. Of course, probably more biased towards H2. The main hindrance to the secured sales and REOs, as we saw with the Bankia failed deal, has to do with the valuation underwriting of the assets, and certainly we haven't been comfortable or as comfortable as we wanted in getting the full valuation. That should clear during the year, perhaps not fully, but yeah, I think we're gonna still see activity during H1, but we're gonna have a busier than ever H2.
Yeah, I mostly agree. I have to say that the analysis, as I said before, that they are doing the banks right now is to identify those loans that are unlikely to pay. And among all the operations that we are analyzing right now, the largest asset class by far is SMEs. So we are now seeing even an increase in the default rate in this sector. It's up to 6 or 6.5%, which is bigger than in other asset class. And we are expecting this default rate to go up to 10 or even 11%. And well, the analysis says that 50% of the SMEs that has asked for an eco loan are going to default. So we are expecting a faster increase in the default rate of small and medium companies. We think that the SMEs portfolios are going to be the predominant in the market in this year, both secure and unsecure. And there is another factor that is going to speed up the number of SMEs portfolios, and is that they are harder to evaluate. We have seen in our experience in previous valuations that the discrepancies between investors are larger in this kind of portfolios, and this can reduce the spread between the bid and the ask, and banks could be more open to put this kind of portfolios in the market. In terms of sectors, we believe that this is going to be those that are more impacted by the pandemic. And we have here tourism and leisure, and there are appetite coming from investors in those sectors because we expect a sharp recovery once the pandemic is over. We have all the industry related with restaurants like wineries, soft and alcoholic drinks. Also apparel and retailers, which are disrupted by the digital transformation that has been accelerated by the pandemic also, and automotive suppliers and construction. And in terms of countries, and comparing this situation of Spain with other countries, we have seen and detected that there are investors that are focusing their views in other countries, such as, for instance, France or Germany. We have experience in France, and the investors are looking for higher returns in that country and less uncertainty. But we should say that the behavior of the French banks are different than the Spanish. So they try to keep the clients till the end and negotiate, and the NPL is always the last option for them. We have seen more in the past, more OTC bilateral deals rather than public offering. So even though we will see an increase in the number of portfolios in the France market, we don't expect to be as large as in other Southern European countries, such as, for instance, Italy or Portugal, whose behavior we think is going to be similar than the Spanish market.
Okay, thank you very much, Alberto. Now a question for José María, who has been silent so far, and this is a mainly a legal question, but also the rest of you are kindly invited to jump in if you wish. I think that during 2017, 2018, we have not seen many sales of individual secure NPL portfolios. But we saw a reactivation of this type of product during the 2019 and the beginning of 2020. As I said before, I think there were very large portfolios launched to the market of this type. And I think that this reactivation is back because some of the uncertainties that the individual secure NPL portfolios have been clarified, or I don't know if solved, but at least the risks or the consequences have been clarified. Do you agree, José María? Do you think that we have a more clear scenario for the risk affecting these portfolios? And do you think that we have developed some market standards on this type to cover these type of risks? And for the rest, if you think that how do you see this risk when you are underwriting a portfolio? Sorry, José María, you are on mute.
Yeah, there always needs to be one person that is on mute and starts talking. I don't really have an answer to that question, or because it is not an easy one. I would say, legally speaking, probably the uncertainties that we had in the past have gone. but at least my experience is that there are new uncertainties, there are new things. I mean, I think Spanish courts today are a bit more unpredictable when dealing with certain issues than they were 2 years ago. I mean, to give you an example, now, well, in the past you thought, well, I've been awarded this REO at the end of this enforcement process, end of story. I'm the new owner. I can do whatever I want. Well, not now, because there's been several cases, and I don't believe that you can call them accidents, where the debtor has been given back, the borrower has been given back the possession of the asset, and the creditor has to start all over again, even after the end of the enforcement process, simply because a court decided that even after the award, it was possible to buy the idea that there was an abusive clause there. So I think there are some uncertainties. Do we have the technology to deal with these uncertainties? I think certainly we have. I mean, we've developed through in these 2, 3, 4 years of discussions between sellers and buyers, the mechanisms that allow the parties to leave the risk, some of the risks behind, or to be transferred to the buyer. So from that perspective, I think we have the technology. The thing is that for some sellers, let's say, transferring the risk is a must, and for some buyers, underwriting that risk and putting a price to it is extremely difficult, which leads to these bid-ask price gap widening in the last month. So not an easy answer to me.
No. Thank you, Jose Maria. Well, I agree with you in some things, but not in all. This is usual in when we are on different sides of the table. But well, in order to give an optimistic message to the audience, I think that one of the most difficult risks that we had, that was the abusive clauses regarding the early termination of the loans. At least this has been clarified, because for new accelerations of the loans, we have very clear rules in the law for these individual loans. So it should not be a problem that the enforcement is declared abusive due to this. And the question is for enforcements which occur before the date May 2019, or June 2019, which was the date when the real estate credit law came into force. No, and for those, yes, I have to admit that for those all enforcements, there are uncertainties, and we do not know how the courts will evolve. But we have seen in certain cases that yes, they stay or they reject continuing with the enforcement. But in other cases, even if the new criteria established by the Supreme Court are not complied with, they accept going with continuing the enforcement based on other principles, such as the procedural economy. It means that it doesn't make sense to stop an enforcement proceeding right now and force the creditor to present to present a new writ in 1 month, because the loan still remains unpaid. No, so I think that that at least the rules in the market that are a little bit more clear. No, so it gives us some hope. But I don't know, you, Jose Maria, or the rest of the panelists, how do you see that when you face the purchase of an individual REO secured portfolio?
If I may, this is more of an answer than a question than an answer. We've always been an advocate of trying to de-risk a transaction, and Jose Maria has hit on a point of vendors trying to transfer the risk and buyers trying to underwrite it at the same time. And I think that there's always leeway to structure in time, give and take, or look for more collaborative approaches. have you seen any change in sentiment or approach or in either vendors or purchasers during this year? Or do you envisage some, or are we going to be on the same status quo?
I mean, from investor perspective, which is where I'm normally, I normally spend my days. I would say that I see some sellers willing to take an open approach to the problem and willing to work on ways around the problem, because I think they understand that is probably the only way to move the prices closer to their expectations. But there are other sellers that are a bit more difficult and that are perfectly aware that there will be people, new people in the market willing to put money to work and prepared to accept risks that other investors that know the market better prefer to leave behind. So I would say there are sellers prepared to engage in a healthy discussion.
Well, I think that also the key of this is the competitive pressure, that you have, and it's true that during the second part of 2020, some selling processes have been more painful than in the past, because there were so many competitors offering attractive prices, and in those cases, of course, the sellers had to enter into negotiations to assume more risk. Okay, and another question, this is for Manuel, but also for Jose Maria. One of the criticism of on the Spanish courts is sometimes focus on the time that you spend between the enforcement of a loan and gaining the ownership of the REO. This criticism maybe can have been supported by the fact that the Spanish courts have been closed for more than 3 months. So now the bottleneck of the Spanish courts may have increased. How do you see this, Manuel? How do you think that is the current situation? How was the situation on timings, and how is the situation right now after the COVID pandemic? And also, of course, Jose Maria, you can add what you think appropriate.
All right, I'll give you my answer on the perspective of a servicing company and not being a lawyer. So Jose Maria's opinion is going to be a must to conclude. But it is true we were coming for very long conversion times from NPLs to REOs compared to other countries, and probably much in line with the Mediterranean country, and I say it properly, not Portugal being included. Portugal appears to be much better than us on this conversion. And it is true too that we have the judicial system closed for months, and now it's been only partially open because you have capacity limitations, and if you need to go to the courts, it has to be by appointment, and this is what the lawyers in the house tell me. So we have long conversion times and now a bottleneck, not only because real estate assets, because of the many issues that they are in the courts. I've looked to official figures from the judiciary system, el Consejo General del Poder Judicial, and in 2019 they reckoned that without any type of negotiation, just the judicial system, time to conversion from NPL to a REO was 36 months, and they expect, because of the COVID, to be increased that by 12%. Well, I think it's a low figure in my opinion, but who knows? What it is true is that if you go together with the legal process with some kind of negotiation with the debtor, you can reduce those times in at least a year. And I can give you an instance that we had in our asset management. We did receive an NPL portfolio in January 2020. And what I can say is that by the end of 2020, with the legal procedure, with the negotiation, and with mediation, that is the main tool that we use to negotiate with the debtor, we reduced by 55% the time of conversion. So basically, around 60% of the assets that you had in there were converted into REOs on the first year, 2020, despite COVID and despite the courts being closed. But the legal numbers, probably, Jose Maria, you have a better knowledge than me.
Yeah, I would say the situation was not particularly good before COVID, and as a consequence of COVID has worsened. And I would say I'm not going to be optimistic here. It's not going to get any better anytime soon. And probably because of that, everyone is assuming that the best way to get the hands on the underlying assets is to try to cut a deal with the client. Is probably a strategy that makes much more sense now than 12 months ago, and it will make more sense in 18 months from now than even now, because let's say Spain is going to receive a huge amount of money from the European Union. That money will be invested in different projects, but I don't see any money earmarked to solve the bottleneck that the courts face now. So my advice, try to cut a deal with the debtor and avoid going to courts if you can at any price.
Okay, and I would like to go back to something that Rafa mentioned before, but also Alberto, you can add what you deem appropriate. You mentioned before also that the reperforming loan portfolios, no, they were. Some of them were launched in the Spanish market and were signed or closed during 2019 and 2020. Now some of these loans may be affected by the COVID pandemic due to the quality of the debtors, because they are reperforming, and also to the legal and conventional moratoria applied by the Spanish banks. Do you think that it was a new brand product in the Spanish market, no, in the last months? Do you think that with the new situation of the COVID pandemic and the moratorias will continue to be an attractive product for the purchasers?
Sure. Pardon me. Sure, Ángel. I do think so. I think, you know, the starting point of this discussion is the bank's capital charge situation. You know, there is a fundamental evolution of the business model of the banks, and they're rethinking their exposure to different business segments and where they should be prioritizing their capital in view of their balance sheet and P&L needs. So whilst not entirely new in Europe, and you know, we bought runoff portfolios from, you know, BBVA in Italy, from Fortis in the UK. Right now we're closing in the UK another relevant transaction where the entity is just recycling capital. And in Spain, there is a transaction that is meant to be closed sooner rather than later. There is a non-core segment. So yes, I do think it is going to be a theme. Of course, this is a more collaborative approach for that, you know, because we started buying performing loans many years ago. We developed a new fund with a different cost of capital that allow us to balance out both risk returns profiles. And I think that you do need the cost of capital one. You also need the servicing capabilities, which not everyone has, and especially at a point in time where compliance is becoming more and more relevant. It's been so in the UK for many years, and I think that government guidelines and indications point to even better care of customers down the line, and you know, we just need to provide the service. So yes, I do think that banks will continue with that trend, and that more specialized players will come into this space of the market.
Yes, I agree with Rafa's comments. We have seen there are type of investors that are trying to buy complex single names or a small amount of loans from a specific sector. If the price is adequate, there will be more of these deals in the market. Moreover, banks are partnership with some technological partners trying to adequate their platforms and allow these type of investors to search for these types of loans easily and find them in an easier way. And so, as Natalia said before, we are in a mature market, and we are evolving this market, and banks are trying to attract new type of investors. And even though this is not going to be the major part of the market in the coming months, I'm pretty sure we will see more of these deals in the following months and years.
Okay, thank you very much to you both. Now, Natalia and also Paula from the purchaser and seller perspective, let's talk about pricing, because I think that during the last months, pricing has been, again, an obstacle for NPL sales, no? From a purchaser perspective, what do you think that are the key issues in pricing or underwriting a portfolio which may make the deal a success or a complete disaster, no? A very big difference between the initial underwriting and the final value obtained for the portfolios. Which factors do you think that may have a more material impact in such deviation? And do you think that maybe now any levers that will help the purchasers in Spain to increase the prices that they are offering to the portfolios? For instance, I don't know, the availability of alternative sources of financing or the liquidity in the market. So I would, in summary, which are the key factors for the pricing, and which are the levers that you think that could help investors to increase the price? Sorry, Natalia, you are on mute.
Yeah, so second person on the call been on mute. So when it comes to pricing the portfolios, it's all about underwriting risk and certainty. I think we all benefited from quite, I guess, a stable run in Spain pre-COVID, where, you know, again, sophisticated players and sophisticated sellers were expecting pretty, I would say, marginal deltas between, you know, initial underwrites and final values. Actually, contrary to the themes that we were seeing in places like Italy and other jurisdictions. So it wasn't uncommon to have like a single-digit percentage variance. However, despite all of this kind of historical data that, again, most of the players now have, and direct comparable portfolios and benchmarks that we can use, we're currently at a bit of crossroads. And unless we have that crystal ball where the assumption is going to settle and when and how the impact of COVID will effectively kind of normalize, it's down to, I would say, specific investor views, right? So how we're going to come out of this market. I mean, we talked a little bit about, obviously, the impact on timing, the impact of bottlenecks. So there's a degree of uncertainty which is currently high in the market, which is driving this delta. So I do expect that there would be, you know, deltas which potentially are, you know, higher than what we've seen pre-COVID, when it was, I would say, very, very, very narrow gap between the winner and the loser. Unfortunately for us, it was even more painful to lose. At the same time, I guess one of the things that sellers and buyers, and we certainly are working and would like to work with sellers on this, is really to position that risk transfer between sellers and buyers, right? So, and how we can bridge this, you know, gap potentially in value, and there are tools to do that, and hopefully that actually kind of becomes more interesting for both parties as a result. There's no magic formulas, right? So obviously the more data we have for initial underwrite, you know, the more precise a bid would be, and, you know, obviously the closer it is to the final value. I do think that there's a general discipline in the Spanish market, actually, to do quite a lot of work for initial underwrites by most of the players. However, there's this element of uncertainty, right? So is there a third lockdown, right? So what happens if yet another change of laws, which actually changes our servicing collection policies, right? So, or servicing actual kind of abilities, you know, to call the customers, right? So what are the changes and what are the restrictions in terms of evictions? So all of this at the moment is quite fluid. So we as investors, you know, we'll have to underwrite that risk. And, you know, if there's any intermittent volatility between this initial underwrite and I would say final bid, unfortunately, this will be in the pricing. So I do expect a bit of a delta there. But again, I think if we have a robust and comprehensive, you know, packages and, you know, I would say reasonable amount of time for the initial underwrite, all of us want to work on the deals which ends up in actual transactions and successes rather than failures. And therefore, this reasonableness lens is extremely important, right? So nobody wants to have big deltas and end up after 2 months working on a deal or so with no trade. So with that in mind, I think we'll try to minimize those. I think there needs to be a willingness between buy and seller more so than pre-COVID to work together to see how some of the, I guess, these risk transfers can be solved. And, you know, availability of financing, I think, is helpful. And we know it's available. However, this is not, I think, one tool which will solve this bid-ask spread or potentially kind of that volatility between initial and final values.
Obviously, the seller perspective is a bit different, isn't it? I think I agree with many of the things that have been said today. Obviously, uncertainty is undeniable right now in the Spanish market. Things have changed. We've been hit by the pandemic. There are probably future hits that we haven't seen yet, and that's going to obviously affect the NPL market and any market. But there's a curious situation right now, and there's so many new investors in Spain at this point. A lot of investors that had never come to Spain. We see a lot of newcomers, a lot of new money, a lot of money is available to invest in NPL scenarios. I mean, our market is very active at this point. So as Natalia was saying, what's the price, right? That's the big difference. I think all these newcomers, what are signaling is they believe in the long-term fundamentals of Spain. And that's something that obviously you want to buy at the right price because you believe things are going to pick up. When? Well, that's the crystal ball question, right? But things are going to pick up, the fundamentals are strong enough. And this is a circumstantial situation, not a structural situation. I think that's what's calling the money to Spain. And that's what a lot of buyers are seeing at this point. So I know that SAREB is it's a non-typical seller in that sense, because we have the luxury to be able to wait at least a little. We're not pressured, but many of our of the financial institutions regulations. So we're a little atypical in that sense. But I really think that all this money we're seeing in Spain is a sign that the fundamentals are there, that the circumstantial hit is undeniable, but it will pass eventually. And I think prices will come to an understanding in the sense of, I think both Manuel was saying it and Natalia is saying it, creative solutions are there for buyers and sellers to really take advantage of. If the timing, and as Jose Maria was saying, all the legal process timing is uncertain right now, there are other ways. We've proven that in the last years. So there are ways to really bridge that gap, and there are ways to really, I think, agree and close deals. I think we're going to see it this year. And I think that the big part there is whether decisions will be made because this is a circumstantial situation or a structural situation. And we really think that the fundamentals in Spain are attractive enough that we are seeing a lot of newcomers. And that's going, I think, to be reflected in deals made this year, I think.
not only newcomers, right? So
True, that's true. That's true.
Old-timers continuing being active.
No, actually, we're seeing people that actually had moved on from Spain. So all old friends, let's say, they are coming back. So yeah, that's true. Not only newcomers.
Okay, good. Thank you to you both. Natalia mentioned before, when she described that the Spanish market as a mature one, you mentioned the secondary market. So you are kindly invited to jump in, but first, to give you a relief, I will address this question to Rafa, Alberto, Manuel. How do you see that the secondary market in Spain will evolve? Because it was developing during the last years, but now we are expecting a high increase in the volumes that the banks will be ready to sell in the second half of the year in the primary market, no? So it will disincentivize the secondary market, or how do you see that will the perspectives of this secondary market in Spain will be?
Certainly. I think, first of all, the amount of money that is available to be invested in the Spanish market, it remains very high. So there is sufficient appetite for both primary and secondary deals. And even though they may have been shadowed by the increase in primary, I think the natural evolution of the market will mean that we will continue to see rotation of fund life by selling portfolios, the natural point. It's more unlikely that we'll see exits from the market, like the Icon deal that we acquired back in 2008. This is less normal to an extent, but also we saw huge mega deals during the last 2 years that, as part of the strategy, included selling a less core segment. So I do see a healthy side. Again, this is not for everyone. These have a lot of accounts that are inactive. You don't have the reps and warranties from the contracts as strong. There are issues around documentation. So you need to be prepared to incur in a higher than average operating cost to service. But at the same time, if you like them, this is a very healthy strategy. So, yeah, we pretty much look forward to continue to see those.
Oh, so yeah, I'm a bit more skeptical about the secondary market. I'm pretty sure I'm wrong here, but I'm a bit more skeptical about a large development of the secondary market in the coming months. It is true that now the primary market in this first half of the year is in a wait-and-see mode, both investors and originators. Relative-wise, it could be predominant, but I see two main issues here. And first is that those assets that were bought in the 2017 or 18 were bought at the peak of the price curve. And I don't see now sellers giving a huge discount of these assets to match what the buyers are gonna put on the table. And the second one is the liquidity. We have a lot of liquidity, and I don't see that an investor have to de-invest those portfolios that were bought in that years quickly, because there is an opportunity cost and there is another asset that is more with more returns in the market. So I think there is a lack of good assets right now, and that's why I'm a bit more skeptical of a large development, at least, of this secondary market.
Okay, well, we have a tie. Manuel, Natalia, how do you, which opinion do you support, Rafa or Alberto?
Sorry, Natalia.
So I think I do expect that we're going to see some secondary sales, and we're already seeing some. Again, some at the more, I would say, transaction level, or they could be also underlying segmental kind of sales down from a larger transaction. So I think there's a lot of activity still going on. And of course, if we think evolution of Spanish market, if we're thinking funds invested in 2017, 2018, you know, it has been already 4 years, right? So, and it comes down to also fund life. And you know, that there's a concept, you know, that we all start considering, you know, those exit options that I talked about when an investment is 4 years plus, right? So, and depending when that particular fund was raised, I think this is a normal, I would say, cycle of fund life, right? So there's always a normal level of recycling and the secondaries that you have to do. And obviously there's an opportunistic one, which we've seen maybe pre-COVID, right? So where people were actually taking advantage of improved, I would say, pricing in the market. I would say now what we'll see, not less of opportunistic, given a bit of instability in the market, but more so of this organic and cyclical, you know, actually disposals of secondaries.
And I cannot say much more than what has been said, but I have the perception that the secondary market is a market that, as opposed to the primary market, where the sellers are forced to do competitive bids to sell, in the secondary market you have much more bilateral agreements, and that makes easier the deals to be closed, in my opinion.
If I may, I'm doing a couple of them right now, so I think and it would be good if we see more in the coming months until the primary market recovers. Otherwise, we are going to be extremely bored. But I think we are going to see more. It's maybe not new stuff, maybe no divestment by the people that came, let's say, late to the party. But I mean, there are a lot of legacy issues to be dealt with from portfolios that were purchased by investors 5-6 years ago, and that cannot be addressed on an individual basis. So I'm sure that we will see more.
Okay, thank you. And we have a few minutes more, so we should talk a little bit about servicers. We will see, maybe we will see some servicers affected in the Spanish market by corporate transactions. And also some big sellers will be renegotiating their SLAs this year. So how do you see that will be the perspectives of the servicers industry in the Spanish market, taking into consideration these two factors? Don't be angry with me, but I think that this question will be firstly addressed to Paula.
Not angry at all. It's a big year for us, so obviously the question is more than relevant. I think it's been discussed in the beginning of the panel. The servicing market, the servicing landscape in Spain has evolved so much in the last 5-6 years. It's incredible. I mean, the development of this industry is, I think it should be a case study. I mean, right now we have a lot of options to choose from, many specialists. As Natalia, I think, was saying, some of them tied up to really big names, some of them independent. There's a lot of choice right now in the market, both for investors that want to do underwriting and both for big AMCs as us that need to organize our assets, right? So it's a very different landscape than the one we encountered in 2014 when we negotiated our first big servicing agreements. So 3/4 of our portfolio will come up for new renewal, let's say, next year. But as you know, anyone that has done this kind of things, there's a lot of months of work and negotiation. So that's going to happen probably in 2021. And I think the situation of the servicing industry is ideal for this at this point. There are big players, there are medium players, there are specialized players. And obviously, I think us, if you may let me talk about SAREB at this point, because I think we are probably one of the pioneers in the servicing industry, at least at this volume. I think we are looking to take advantage of this, to really look at our business model to see what's working, what's not. We are looking, and this is not, we've talked about this before, we are looking at really specializing the servicing that we are receiving, because right now or at least in the beginning, I think vertical servicing was maybe the only option, or at least the only option available in this kind of volumes. And that right now, I think the industry has evolved so much that we really want to take advantage of that specialization and of those new opportunities that the industry is providing us. So big year, I think, for the servicing industry. If I may quote also the Bankia and CaixaBank merger will influence, or will have a lot of influence in the servicing market, because that's obviously a really big chunk of the servicing clients. So that's going to be very, very interesting. And the servicing industry, I think, is more alive than at any other point. And it's a great, I think it's a great moment for the market.
Well, I couldn't agree more with Paula. I don't see, other than the space of mergers, I cannot see more consolidation coming into the market. We don't have that many players in Spain at the beginning, because all the banks had one servicing company, but the banks were reduced because of the financial reform from more than 50 institutions to less than 10. And then you have a few independent ones. And I totally agree with Paula. The key issue is going to be a specialization. And Paula and I did work together at SAREB, and we knew very well that it's not the same to deal with an NPL, and in the term of real estate assets, all collateral is not the same land, that work in progress resi, that commercial centers or office space. And you don't have a single servicer that can provide all this type of different services. You have one that may be good at NPLs, the other one be good at resi rented assets, and the other one being good selling reals. So specialization is going to be the key issue. And I see that within the existing services, you will have different teams that they will be specialized on different type of assets. And I think that's the key work on the servicing industry, to specialize themselves. And within that, having said that, don't forget that the next wave of NPLs is going to be SMEs, and that's a different animal that will require further specialization on the servicing companies.
I may add to that, I think I absolutely agree. I think the next wave of services that we're going to see are completely different than the ones we have now. Obviously, real estate market has been central for us and for the NPL industry in the last 10 years, I would say. And I think that's going to change. We're going to see a big change, and there's a big opportunity there for services that can really do the job, which is completely different from the ones, I think, or the specialization that we see now in the players. So I think big opportunity there.
Okay, thank you very much to you all for your participation in this panel. For me, it has been a pleasure to share this time with colleagues and friends. And I also hope that the audience has found this panel interesting. And finally, I have to thank again DD Talks for organizing it. Thank you very much, and hope you have a nice day, and we have a nice year taking part in different transactions in the NPL Spanish market. Thank you very much.
Excellent. Thank you all.
Thank you.
Thank
Bye.
you.